Hi there, John Bones again with Equity Trust Company. In this segment, we're going to be talking about 7 of the most common frequently asked questions pertaining to a self-directed Roth IRA. Let's go to the whiteboard. So number 1 is, what is a self-directed Roth IRA? Well, this is pretty simple. A self-directed Roth IRA is really no different than a Roth IRA with any other financial institution. When we say self-directed, that's merely an industry term. It indicates to you that you can self-direct your own Roth IRA into really any asset class that you see fit for your retirement plan. That could be stocks, bonds, mutual funds. That could be, in the case of many of our Equity Trust clients, real estate, buying rental properties, flipping houses, making loans secured by real estate, investing in venture capital or small business startups, investing in precious metals, cryptocurrencies, digital currencies, if you will, in a wide array of other alternative investments. So again, self-directed Roth IRA means you can self-direct, you can take control of your own retirement plan. Number 3 is, who can set up a self-directed Roth IRA? Well, this is one of the great things that every American, assuming that they are eligible, can have a Roth IRA. It could be folks that are in way past their retirement years could have a Roth IRA. You have to meet the eligibility requirements. What are the eligibility requirements? Well, the first thing to know is that with a Roth IRA, you have to have earned income. So you have to have earned income in order to make contributions to a Roth IRA. And then you have to make sure that you don't make too much money. This is what's called modified adjusted gross income limits. And we're not going to get into details in this short video. You can check with your CPA or accountant to determine if you make too much money to do a direct contribution to a Roth IRA. Again, these are called modified adjusted gross income limits. In other words, if you make too much money, you can't make a direct contribution to a Roth IRA. There is a little known tactic used called a backdoor Roth IRA. Check with your CPA or tax accountant or tax attorney to verify that you can do this, but you could potentially contribute to a traditional IRA and then convert the funds over to a Roth IRA if you make too much money and are being told that you can't contribute directly to a Roth IRA. So in other words, just about everyone in the United States could have a Roth IRA if you do it properly. The next question is, how much can be contributed to a Roth IRA? Well, this is going to be dependent on your age. The contribution limits are as follows. When under the age of 50 in the tax year 2019, you can contribute up to $6,000. When you're 50 and over, you can contribute up to $7,000. They call that a $1,000 catch-up provision when you're 50 and over. And you can contribute all the way up into your later years, providing that you have earned income. Another great thing about the Roth IRA is there are no required minimum distributions for the account holder. So for those that have a traditional IRA and you're familiar with the 7.5 required minimum distributions, with the Roth IRA there are no RMDs. You're not forced to take money out of the account. Keep in mind that with these contributions, earnings within the plan can be unlimited. So to give you an example, we have a client here at Equity Trust Company that in 1 year's time, they took their $500 Roth IRA through investing in real estate and grew it to nearly $50,000. They didn't make excess contributions because, again, earnings within the Roth IRA are pretty much unlimited. The next question is, are Roth IRA contributions tax deductible? They're not tax deductible. Now, you might look at that and say, well, I'm not really sure that I want a Roth IRA if I don't get a tax deduction. I'm used to getting tax deductions when I make contributions to IRAs. The great thing about a Roth IRA is when you put money in, it's after tax. You don't get a tax deduction, but it grows tax-free through all of your earnings. And then when you take the money out after 59.5, providing that you've seasoned the account for 5 years, it's all tax-free earnings. It's all tax-free money coming out of the Roth IRA. In other words, you pay taxes on the seed, so you don't have to pay taxes on the much larger crop later on in your retirement years after the qualified retirement age of 59.5. So what are some advantages of a self-directed Roth IRA? Well, of course, with a self-directed Roth IRA, with just about any financial institution, you can self-direct into stocks and mutual funds. But what's great about the self-directed Roth IRA with Equity Trust is you have many different options. Although we don't sell investments or solicit investments or show you where to invest or how to invest, you can leverage your own knowledge and expertise. So if you have an expertise with flipping real estate or buying rentals or partnering with other investors through real estate joint ventures or venture capital or small business startups, precious metals, digital currency, whatever it is that you're good at or you want to get good at, you can do this with a self-directed Roth IRA, providing that you follow the rules and all of the regulations. So that would be the first advantage with the self-directed Roth IRA, is that you can invest in just about anything. And then the second advantage would be what we already sort of talked about, which is the tax nature associated with the self-directed Roth IRA. It's seeded with after-tax money, it grows tax-free, and distributions are tax-free. And so when we talk about the tax-free nature of the Roth IRA, let me give you an example or representation. I have two clients here at Equity Trust Company, a husband and wife, and they have 13 rental properties in their Roth IRAs. 2 Roth IRAs, 6 rentals in one Roth IRA, 7 rentals in the other Roth IRA. Husband and wife, they're generating over $110,000 in net tax-free income every single year in their Roth IRAs. And because it's a Roth IRA and they're over 59 and a half, the great thing is that $110,000 can be distributed and it never hits their 1040 as ordinary income taxes. It's tax-free cash flow. What's more powerful than that, right? Last but not least, how do I open a self-directed Roth IRA? Well, it's a very straightforward process. Here at Equity Trust Company, you can simply log online through our website, you can start the application process, or better yet, you can call in and speak to one of our representatives and they can help you establish and fund this self-directed Roth IRA. Maybe you have a Roth IRA with another financial institution, you want to transfer over into the self-directed Roth with Equity Trust, you can do that. Maybe you have funds from a Roth 401k you want to roll over into the Roth IRA, or maybe you just want to make a one-time contribution. We talked about the contribution limits of $6,000 when you're under 50 and $7,000 when 50 and over. You could potentially set up a brand new Roth IRA, providing you're eligible, and make a direct contribution. To learn more, you can go to our website and get more details on establishing an account, or you can give us a call directly. We'd encourage you as well to subscribe to our YouTube channel here. So if you haven't already, hit the red subscribe button, subscribe to our YouTube channel. You'll get all of our continual video updates. We do these videos frequently. We look forward to seeing you on our next video.